Good morning, Paul Georgie from Allendale. It's August 19th, 2011, and Friday morning. Markets have exhibited a lot of volatility already on Wall Street and the stock markets around the world. We've had sharp sell-offs in Asia, in Europe here this morning. That has carried over into the stock indexes, and anticipating that the Dow will open sharply lower here this morning. However, in the last half hour, we've seen some profit taking, some correction in these markets. Crude oil, which was down sharply, $2 at one time, down only 46 cents as we speak. The concern around the world still involves the global financial condition, and it appears to be that condition is still very fragile. You've got a lot of uncertainty, and traders are pulling money out, meeting margin calls, and trying to find out where their assets are and what type of equity they have left, and that's causing some pressure in the agricultural commodities as well. Since the 7 o'clock hour, however, we've seen the dollar sell off sharply. We're down 48 as we speak, and the last 15 minutes of trade here this morning in the electronic session, we've seen grain markets rebound from their earlier lows. Corn up 3, wheat up 3, beans up 3, and giving us some indication that we could see some risk-on type trading again in the agricultural commodities. Another factor that could be supporting the ags at this point in time is the flight to quality, so to speak. The gold market up sharply, up 60 some dollars here at one time overnight. As we speak, it was up about $30. So we're seeing some buying that traders are saying, well, maybe gold's high enough, let's buy something that's cheap, where we do have some supply issues like the grain markets. And that takes us to the thought here of what kind of yield are we going to have. We're starting to see some harvest take place. We had a customer report on some harvest down in southern Kentucky, and the yields down there were actually what he expected and right in line with what last year's crop was at around 180 bushel an acre. We'll see some producers starting harvesting here in central Illinois and Indiana as early as next week, so we'll start to get some early yields there. We would anticipate that those yields are going to be considered bullish to the trade because from what we understand, the early corn in those extremely dry areas are where the yield losses occurred. The weather forecast for the week, next week and 5 to 10 days out is looking for some moisture pretty much across the Midwest. However, there will be dry spots or spots that are going to only get a quarter to a half inch of moisture. That's certainly not a drought breaker, but at this point with the cooler temperatures, it is supportive to the crop, especially to soybean crop here in the southern Midwest. The technical action, chartists have been watching this yesterday with the market taking out some support and then bouncing back late yesterday. Key numbers here today, I think, in the corn especially, is the $7 area, 705, and in the November soybeans around that 1350 area. If we close below that, we could see some more pressure here in the markets. And so we've got a couple things that we need to watch here today. We've got Wall Street that is going to be watched very closely. If we see tremendous amount of pressure there, we could see pressure in the grains, and that could be that domino effect that if we close below critical support, we could see some more selling as well. So the other side of that coin, if we don't see that selling, we we could see a nice rebound here as this market is definitely concerned about the yield supply side of the equation, and definitely something to consider and to keep in mind. In the livestock trade, cutout values for beef were higher yesterday, 66 higher in the choice, 90 higher in select. However, cash cattle traded anywhere from $2 to $3 lower at that 113, 114 area. We got a cattle on feed report this afternoon. All categories are looking to be on the negative side, as we've got a plus for the cattle on feed. We're looking for placements to be in that 116, 117 range, and marketing's under 100. I think the average trade estimate is 96.5. In the pork complex, hog markets are cash markets are weak. We've got cutout values down, and we're looking at seasonals here that from this mid-August time frame into October have a tendency of working lower. So something there to be monitored very closely. If we start taking out technical support, it might be a situation where you don't want to fight it too much. The best answer for that is call the Allendale representatives. Will be working with you and trying to help you figure out the best strategy for your situation. So you can reach us at 800-262-7538. And before I leave you this morning, I want to let you know that we've got the Allendale Crop Survey next week. It'll be starting on Monday. You can go right to our website, input data, and any help will certainly be thankful that we can get the correct numbers and give us an idea of what kind of crop we got out there. So have a good weekend. We'll talk to you on Monday morning. Thank you.